So anyway, so that'll be sent out later on after class, immediately after class. We'll send that out. Okay, so let's go ahead and get started on the sampling. We'll finish that up. Hold on a second. Opened up the wrong one. Okay. All right. So what we'll do is we'll go through. I thought we did this one already. Did we do this one? Maybe we didn't. Okay.
We only did question 1.
Okay, well, we'll jump into this one. So we'll do question 2. Question 2 is a very similar one to what these up here. And as a matter of fact, if you want to, you can copy these things down. I didn't put them in just because it's at some point I don't put this stuff in because, for instance, you get to the CPA exam, it's not going to be like that. Let's give you the data and say, here you go, figure it out. Okay. So let's go to number 2. So number 2 is we have accounts payable the books for 5 million. Total number of accounts payable is 1,000. And we took a sample of 10 items. And again, the whole idea behind sampling is that you take a small amount and then you project over the entire population, based on that small amount. And for classical sampling, it could be it's not just for accounting, it could be for anything, but we use it obviously here for accounting. Okay, so might as well do them in order here. We got to find the average book value. And the book value we have 10 items that totaled out to this. And we're going to find the average of them. And same thing for the audit. Oops. Okay, so the average book value. So we had a sample size of 10. So we'll divide this by 10 items. Equals 5,140. And we'll do the same thing for the audit. Uh, 5,314, I think. And I think I talked about this before, maybe I didn't. Which number is more persuasive? Which amount is something we'll rely upon more, the audit average or the book value average?
Audit.
Yeah, the audit. The number we came up with is always going to be more persuasive, is a number that we calculated ourselves. Whereas this is a number, not to besmirch anybody, but it's just a number that was given to us from somebody else. So, you know, it's given to us secondhand, whereas this number we looked into ourselves, so it's going to be more persuasive. Okay. And I'm going to copy these down to the next page because we're going to need them. Okay. So we have these audit average and the book average, and we're going to use these to project over the entire sample. Now, the mean per unit one is saying, okay, we're just going to use our numbers. We're going to ignore it. The book value has nothing to do with what we're looking at. We just looked at our number, what we came up with. This is a number we're more confident in. And so we're going to use that to project our, find the projected value. And so we do that by taking the audit average. Times the total number in the population, so item numbers, 1,000. So what we're saying is, look, our average is 5,413. All 1,000 of these should be 5,314. Equals, right, to go in the head, it's 5 million. And this will be the projected value. Let me make this big enough so that we can see it about. So again, we say, okay, there's 1,000 total items here. And each item we think is going to be what we came up with our average. So this is the total projected value. So you got 1,000 items, every item should be the same as what we came up with. Excuse me. Okay, so be lazy and copy that. Okay, so down here, let's do the, let's see, we have the, I'm going to cheat and make sure that I'm doing it the same as I did up here. Total book value, projected value, and let's go to the next one. Total book value, projected, okay. All right, so. Total book value for this was $5 million. So, you know, their accounts payable came up to 5 million, so this will be down here. projected value, what we think that it should be, is 5,314,000. So our projected, oops. Projected misstatement is what? 314,000. Okay. So we project a misstatement of 314,000. Is that an overstatement or an understatement?
Understatement.
Good. Yeah, we think it should be excuse me, 5,314,000. They only have 5 million, so they're understating their the accounts payable. Okay, so that's mean per unit, and mean per unit, if you think about mean, it just means the average. And whose average? Well, our average is more convincing than their average. So we can take our average and say, okay, everything is worth the same as our average. Okay. Ratio estimation. Ratio estimation is, the idea behind it is that large accounts, larger accounts will have larger errors and smaller accounts will have smaller errors. For example, if you have an account that has $50, it would be kind of unusual for it to be off by $900. Right? If you have a $50 account, the idea that it would be off by $900 is would be a little unusual. However, if you have a $50,000 account, being off by $900 probably isn't all that unusual. It wouldn't be out of the question. So the idea that small accounts probably have smaller errors, larger accounts have larger errors. That's the whole idea behind the ratio estimation one. And what we do is we do a ratio. We do the audit amount divided by the book. Oops. Okay, so average audit was what, 5? Over the average book. $5,140. Times the total book value. $5 million. I'll leave it up here. And this will be our our projected value. So we're going to take the 5, this, and divide it by that. And then multiply it by 5 million. $5,169,260. Let me write it. Let me write it down. Hold on. This is what I got. 5,069,260. Now it might be 261 because I got my calculator looks like this, so it's a very limited calculator. So it might be 5,169,261. I'm not sure. Okay, so this will be a projected value. It's not going to make any difference. Immaterial. All right, so this will be our projected value. Is that? Okay, so the misstatement would be 169,260. Okay, so they have on their books 5 million. We say that they should have 5 million using this method. It should be 5,169,260. So overstated or understated?
Understated.
Understated again. Yep. And so, yeah, so ratio estimation says that, you know, everything that you know, small items small dollar values will have small errors. Large dollar values will have large errors, which probably is most of the time. You know, you think, you know, a $50 account may have a $5 error, whereas a bigger account would have a larger amount. In my humble opinion, I think the ratio estimation one of all of these is probably is usually the one that you'd probably want to go to if you're on a fence. And we'll talk about when you use each one of these, but this one is probably I would say the most theoretically accurate way to do it. It just makes more sense that, again, large items, the errors are probably larger than small items. Okay, difference estimation is sort of like the opposite of ratio estimation. It says that if there is something that's off, it's always off by the same amount, or not always, but most of the time it's off by the same amount. For instance, if there's something like a handling charge that's supposed to be charged to all the orders, let's say it's whatever it is, $20. You know, every order is supposed to get a $20 handling charge. So whether it's a $100 order or it's a $100,000 order, it gets a $20 handling charge. And let's say that handling charge is one of those things that sometimes doesn't get put on the invoice. So that oftentimes, whether the account is large or small, it's this handling order that's missing. So that's kind of where difference estimation comes in, is when something that large accounts and small accounts are off by the same amount often. That's when you use this difference estimation. Okay. And doing this is the strange thing about this one is we find the misstatement first, and then we back into the then we back into what the, the total, the projected value. All right, so we have our audit value. This is the average audit. So the difference here is amount, I don't know quite yet. $174. Yeah, I think that's it. Okay, so this is the difference. Now, here's what we do with this difference. We multiply it by the total number of items in the population. We say, okay, everything is off by, so we're saying, okay, everything is going to be off by $174. Right. So 174,000. Oops, not that. So this would be the projected misstatement. Gotta do something. All right, so this is our projected misstatement. Now notice that's different than what we did up here. Up here we got the projected. We got the projected values first. And then backed into this projected misstatement. We're going to do just the opposite down here. We got a projected misstatement. Now, before we go to the projected value, are we saying that their books should be higher or lower by this 174? You know, this is what we came up with the average, 5,314.
They should be higher, right?
Yeah, so these are understated again. Yeah, so we're saying, look, you have to add 174 onto each item to get to the projected value. So it's a little bit different than maybe sort of like this up here. Hey. Let me get on one page. So what we're saying here is this, we don't know what this is right now, but we know that it's misstated by 174. So the projected value must be what? No, not let's use numbers. 5,174,000. If we're saying in total, they got to add 174 for each one of these, they got to bump the entire total up to this. So it's kind of sort of like backing into the number, the projected value. You also just think about telling you, you have to add 174 on everything. That's maybe a better way to think about it.
I have a quick question.
Hmm?
In example 1, all 3 of the different estimations resulted in an overstatement, and in this example 2, they all ended up in an understatement. Is
Yeah.
that typical, or
Interesting you
it's
should
just
ask
these
that. Oftentimes it is, but I think I'll let you guys do number 3. Number 3 is an unusual one in that it isn't. It is possible that they're not all one way or the other. And actually, I'll be quiet. See if you guys can figure out number 3. Yeah. So, but to answer your question, they don't have to necessarily all be the same. And number 3 is an example. Is going to be an example of that. We'll discuss why in a minute. But usually they do, but not always. So go ahead and see if you can figure this one out. I will do the same.
C is overstated. Or I'm sorry, yeah. Number 3, problem, the mean per unit is overstated by 100,000.
Yeah. Now, I was gonna. You guys probably already figured this out, but these there's only 5 items in the sample. Okay, yeah, and this one is kind of a, kind of an odd one here. In that our projected value is 2,400,000. So for the mean per unit, is it overstated or understated?
Overstated.
Right. We're saying it should only be 2,400,000, and they have 2,500,000. So we'd say, oh, you got this, overstated. Coming down here, ratio estimation, we're saying that it is
Understated.
understated. We're saying they have 2,727,000, they only have 2,500,000. So it is possible that you have, two different, overstated, understated in there. And you'll notice on this mean per unit one, it completely ignores the book value, the book average. If you're doing the mean per unit, quite honestly, you don't even have to do this one. If you already said that you're not, that you're going to use the mean per unit, you don't even have to do that one. But it would, if you're going to do the other ones, the other methods, and we'll talk about when and why you do it. Second here. Okay, so ratio estimation, understated, and difference estimation. We're saying that each one should be $20 higher. So that this should be $20,000 projected misstatement should be higher. So we're saying that this is overstated or understated?
Understated.
Understated, good. Yeah, they should have 2,700,000 on the books, and they only have 2,500,000. Oops. Don't do that. What do we have here? Okay, I think I'm going to assign for homework. No, I'm not going to do that. I'm going to give you guys a test this week anyway. So I'll finish this up next week. We'll finish this up next week. I don't want to give you guys. All right, so we'll stop right here then. Any questions on this one?
No, it's pretty easy overall.
Okay, good. Yeah, well, once you get kind of the hang of it, it really is just how do you take this and project it over the entire population. All right, let me do something here though. I don't think. All right, the next thing we're going to do are the multiple choice questions, which will be similar to what's on the test. So let me. So you should have gotten this. If you don't have it, it's in Blackboard. It should also be in your email. And so here's what we're going to do with this. So multiple choice questions. So as a class, oops, what am I doing here? We're going to do the first 10 in a poll. I'll give you the poll right now. What? No polls or quizzes created. You gotta be kidding me. Ah. Oh no, I have 3 polls made and they're not showing up. Ah. Okay, well, we'll do it a little differently. We'll go through by vote as we go through these then. So if you get 5 out of the 10, oops. You get +2 add on the test. Seven out of 10. +3. And if you get 10 out of 10, +4. And actually there's 12 on here, so we'll go all the way to 12. You got 12 out of the 10. Okay, so go ahead and, let me get rid of this. So go ahead and start going through these and just write your answers down, I don't know, on the side of a piece of paper or something. And then we'll go through and we'll go through them together and see where they are. And whenever you're, I think when we come back from break, we'll go ahead and go through these. So let's go ahead and take a break and we'll come back at say 6, what time is it? 6:48. Let's say 7:05. And so, I'll give you a chance to look over these and take a break and whatever, but we'll go over these and we'll have a chance to get extra credit points. And I'm going to see if I get the poll working here. Although I'm not very confident in that. All right. So we'll say be back at 7:05. Okay, the poll is up now, so. We'll go through the first 10, then we'll do the last two. I'm just on our own. Okay, those of you that are just, go ahead and finish up in the poll if you would, excuse me. Your answers for the multiple choice questions. And by the way, don't be worried that I will share the results, but they will not have your name by it. So don't worry that, you know, oh, I picked C or whatever, and it won't have any, there won't be any names, it'll just be the results of the poll will be given. I just sent out some information on the CPA exam that I typed, you guys asked about it last week, so we'll go ahead and do that next. And there's two files. There's one about taking the CPA exam before 2024 and then after 2024, which we'll talk about after we do the poll. So yeah, so if you're doing the poll, go ahead and finish up the poll, and then we will jump into the. We'll go over the answers, and then also for 11 and 12, we'll go. We'll just do those by. You know, by either chat or by vocal voting for those two. For whatever reason, Zoom only allows to have polls for up to 10 questions. So wondering why in the future I'll have more polls in here, but in the future we'll have polls that will be more than that. And so it'll be 1 through 10, 11 through 20, and that because it's just I don't know, just the way it is. Okay. Still waiting. Okay, no problem. Let's back to this one. And the one thing I will say about the CPA questions, CPA exam questions, on average, you need about a 75% to pass the CPA exam. Now they won't. They say it's not really a percentage because some things are worth more than others. But basically, you got 100 points. You need to get 75 points or whatever to pass the any given section exam. There's 4 sections of the exam you need to get. So my point being is you can miss quite a few questions and still have no problem passing the CPA exam. So, and when you get to the CPA exam, you are going to get questions that you have no idea what they're talking about, and just the way it is. And you can't let it throw you. You know, it's kind of like in sports when someone, you make a bad play, you can't sit there and dwell on it because you still got to finish the game. So. Same idea is, you're gonna run into those things that are not the questions that you're not familiar with or you're not 100% sure of, and quite honestly, I mean that's just the nature of it. Sometimes, and two, some of the questions they give you will be questions that are not counted anyways. That's another fun part about the CPA exam is sometimes they'll be testing questions. And if you're doing well, sometimes they'll throw you tough questions because they think, okay, you're going to pass it anyways. So let's see what someone who passes the exam is going to do with these new questions. I was taking chartered or certified financial. I can't really know what it is now. A certified financial manager thing, I was doing online, some of the CPA exam would be. And I remember I knew that I passed it because I got all these really weird questions. Like, I got 5 questions about some really weird equity section thing, that very strange. So but then I thought, okay, either they're just trying to mess with me or else I passed it because now they're saying, okay, let's see if someone who passed it, and sure enough, I passed it, thankfully. But yeah, so sometimes if you get a bunch of strange questions, sometimes it's a good thing. Okay, looks like everybody's got their stuff in, so I'm going to end the poll and share the results. Okay, let's take a look-see here. Number 1. That is correct. Which is not required. You are not required for gains and losses. Questions 2. 2 is also correct. Different interests exist in printing the financial statements. Three, operational audit. Yeah, operational audit is similar to consulting. And yep, try to make things better. Five. Perfect. Six. Yep. So far, so good. Good. 7 is a compliance audit. Yep. 9. Good. And I want to talk about this first one for just a second. You might say, okay, let's look and see if there's more of this going on. How big of a problem do we have? That's not an unusual thing to say. There is a word in A, though, that is a kicker. And it's this, all illegal acts. So do we try to find all illegal acts? Never. You'd never, if you're auditing, say, Walmart or something, want to find all instances of someone shoplifting. So, whenever you see absolutes, a lot of times, look for words like this. All, always, those kind of things, because we generally don't talk in those terms when we talk about auditing. And 10. Yep, management has control of the financial statements. And let's go ahead and do 11 and 12. We'll do this just by either in the chat or just saying it out loud. Which following types of services generally provided by only CPA firms?
Financial.
Yep. Yeah, that's what the license is for. It's for doing financial statements. The right to practice a CPA is given by
State boards.
Yep. Very good. Okay, well, we will add 5. Oops. Underline. Okay. I will close the poll. And you do not need to turn this one in because your names are going to be on here. Stop sharing. And then I will download the results. Oops. Okay. All right, so next thing, I think let's go ahead and look at those the CPA stuff. So there's two different ones they put out there. There's one, the CPA exam before 2024. And this kind of shows a little bit about some of the new stuff taking place between now and then. And then in 2024, it changes quite a bit. So up before 2024, up to 2023, if you're planning on taking the exam, it's going to be similar to what we have today. There's a few changes in here that we'll go over. But if you're planning on taking it into 2024, it changes considerably. So there is I guess a question of whether you want to take it before 2024, which would maybe be a little bit more assured. No, not assured, that's a bad word. A little bit more known, that it's similar to what we have up until this point. And then there's a 2024 exam, which is going to be considerably different. There's going to be quite a few things that are different. So let's take a look and see what they have there. Okay, so this is for if you're taking it between now and 2023. Some of the changes that are taking place, they're not too much, they're not too different. They talk more about business processes, and when we talk about as you go through, we get into more of the nuts and bolts of auditing, which will probably start after chapter 3. They focus more on cycles rather than accounts. So, for instance, there's the revenue cycle, where you make a sale and the account for the accounts receivable and all that kind of stuff, collect the accounts receivable. That, whereas in the past, it's been more of an account-driven one. Now, the actual testing hasn't changed, just to be clear. the actual nuts and bolts of auditing have not changed in many years, but it is going to be a little bit more of a focus on cycles rather than on the accounts themselves. Okay. The auditing section. Oh, by the way, I don't think I told you. So these sections, basically you have to get 75 points, or you think about it as 75% for each of these to pass each section. You can take each section individually. Have you guys talked about any of this in your other classes or no? I mean, do you guys know the cycle of it? How you basically have a year and a half to pass all 4 sections. So you're in that year and a half, that 18-month window or 18 months time period, it starts when you pass the first section. So let's say you pass the auditing section first. Okay, well then you have another 18 months to pass the other 3. And there is a testing time window, which is basically about 2.5 months, that you can take all 4 parts in that window, but you can't repeat any of them in that window. So for instance, you can take auditing, there's financial reporting, financial accounting and reporting, FAR, all the other ones that you can take in that window, but you can't take the same one twice. So if you say, okay, I don't, geez, I just took that, the business one. I just took the business one. I don't think I did very well. I'm gonna take it again. You have to wait until the next window. So basically the windows go in 3 months periods, and there's a blackout period near the end of the thing. So you have 6 windows to pass all 4 parts. Now, if you say, well, what happens if I don't? What if I pass, I pass the one and then I go, it's a rolling 18 months. It's a rolling 6 periods. So The only one you would lose is the first one that you passed, only those that are more than 18 months old would you have to take them again. You don't have to, you have to start over completely. Whatever ones you pass that are not more than 18 months old, you'll still be able to use those and, to complete the 4 in the 18-month period. Question on that? Does that make sense? Or not really? You basically have a year and a half. Yeah, David, do you have a question?
Yeah, no, it makes sense.
Oh, okay, all right. Yeah, so that's a period of time. There's 4 sections to it, and the sections it should be here. So this is auditing, what we're doing here. So the auditing section, they talk about more about the processes rather than the accounts. It's not that big of it. There's not that much difference to it. BEC, this is the business section.
We are looking at you, not your screen, in case you.
I'm so sorry. You'd think that after like 2 years of this, I would be better at it, but no, I'm not. So yeah, I'm sorry. So here's the auditing section. So the auditing section, and they talk about that they look at the business processes rather than the accounts, although the testing is pretty much the same. It's really just how they group it together. So yeah, so the auditing section is going to have a little bit more on the processes rather than on the actual accounts themselves, although the testing itself will be exactly the same. BEC. They say in-depth content and data analysis and digital skills. That's kind of like the thing that they're going to take away from that one, or what they're going to take away from the changes. They've had this before. They're just going to emphasize it a little bit more. So it isn't that this wasn't tested in the past. There's still plenty of test questions and all that based on this, but it's going to be a little bit more intense or more the quantity of it more than in the past, so that you can get data and make some kind of form some kind of a judgment based on the data that you got. Okay, it's in there twice. Oh, I think it was kind of all over the place. This came from Becker, I think. Anyway, let's go to some of the other one. This is kind of, actually I do want to talk about these two. Go quite a bit in here. The blueprints, by the way, they talk about the blueprints. The blueprints for these are kind of crazy. The blueprint will used to be a kind of a chart of what you need to study for the CPA exam. They used to be like 10 pages. The current one is 94 or 98 pages, something like that. It's in the 90s. They've almost become a little bit ridiculous in how detailed they are. But when they talk about the blueprint, this is what they're talking about. The blueprint is that they're absolutely huge now. It's like 90 plus pages. Okay, we're going to talk about this in class at some point. So BEC section, and this is both for VC and for auditing what they call the SOC reports, SOC 1 and SOC 2, which we'll talk about in here. This is to do with internal controls. Those are added. There's not, even though they do have these in here, they are not what they are. What are they? They're audit reports for when you have someone else do something for you. For example, payroll. You may have another company do your payroll. ADP is a very common company that's where people do payroll, and ADP will have one of these what they call SOC reports. So SOC 1, SOC 2, and that sort of thing. Now, here's the kind of wacky thing about these SOC reports that they're talking about, how they're emphasizing them. You'll notice something on these SOC reports. There's a little R behind them. Those are registered. These are actual reports that are the AICPA has, you know, the copyrights as far as those reports and the wording on them and all that. So this is sort of like the AICPA requiring you to know about their their copyrighted reports that they're you know, putting out there. Now, there's nothing, quite honestly, there's nothing terribly wrong about this, but the point being is that when an organization has their own content that they're putting out for this, you probably want to study up on it. You know, I'm not saying that they would, you know, frivolously put it into the CPA exam, but if they think it's important, it very well may be in there. Okay, and they talk about DC again, using it for reports. Okay, they used to talk about the differences between the international standards and Gaap, and they don't talk about that anymore. So they used to say, okay, international standards you account for it this way, and US standards you account for it this way. They don't do that anymore. All right, so the other two sections of the exam are auditing, there is business that we talked about. There's financial accounting and reporting. And there is regulation. Taxes, law, hardly any law. When I was going through, we had a whole quarter of the exam was on law, but now it's not. This is called FAR. This is the hardest one. Usually the most difficult. Business environment and concepts. This is usually the easiest. And sometimes people say start with this one, and sometimes they say start with the FAR one, because you know if you pass the FAR one, that's the hard one, then the rest of these will be easier. But I don't know, some people say you know, pass the easier one and you can go through. So this one out here, those called reg, and this one is auditing. And yeah, that's it. Now I'll send out some more information on how you actually apply for the CPA exam, because basically you set up an account. Has anyone here applied for it yet?
No.
Okay. All right. Because there is the application. I'll send it out. I'll go through and look it up. But basically, to sit for the exam, you go to the state and you set up an account, and it's free to set up the account, and that account allows you to turn in all your information and your fees and all that kind of stuff, and we'll go over what those are. But basically, you need to get your transcripts from your schools, and if you're still working on them, that's fine. There is a 120-day rule that it's possible you can sit for the exam as long as you will complete all the educational requirements within 120 days. So this is the 120-day rule. And now, you know, don't sit there and think if I pass the exam, they won't want that. If they do, if you pass the exam and you don't do the educational requirements, they take it away from you. But basically, yeah, so you'll give them their transcripts and they'll go through all the approvals and all that to have you sit for the exam. They used to use templates. I don't think they use that anymore. This last year, they stopped using the templates, which meant that it used to be for every school, they'd have a template that you, as long as you passed for that school you were in. They don't do that anymore. So you have to do your education requirements. I think it's a couple $100 for them to go over your transcripts. You have your transcripts sent directly into them. And once everything is approved for you to sit for the exam, the education requirements are there, then you can start scheduling for the times to sit for them and paying for the individual exams themselves to be given. If you have foreign education credits, I think it's like $50 more to do the foreign education credits, but it's definitely worth it if you have classes, because $50 is a lot cheaper than taking an extra class or two, right? So if you do have foreign credits, I took class when I was in Mexico and now I'm here, but half my, fill it out, $50 is way cheaper than and faster than having to make up prerequisite classes. So if you do have foreign credits, I encourage you to go ahead and pay the extra money to get those through. So again, so once you're cleared with the education requirements and you're cleared to sit for the exam, then you can start scheduling the exams themselves. The exams themselves are done through the Prometheus. I think it's still called Prometheus. The Prometheus Learning Centers. They're the ones that actually do it. You'll schedule for times. You need to schedule those early. And so whenever you're ready to take it. As far as studying for the exam, the reviews are, there's quite a few different reviews, but the big one is Becker. Becker's probably the most famous one. It's a very expensive one. I think it's $5,000 or $6,000. They have other ones bouncing around between, say, $1,000 and $3,000. Many of them are very similar in that they will show you exactly what's on the CPA exam. The actual format that it will be in is there. So what you'll actually see on the screen is virtually identical to what they have in these reviews. And so I would say you definitely need to take a review of some sort to sit for it, especially just for nothing else, just get used to the format that you're going to see these, the questions in, and they all have practice exams. You can actually sit there and take a practice CPA exam for whatever section you're in, and they usually have multiple ones that you can take, and they will assign questions randomly and all that kind of stuff. I used to do the CPA review, and at the end of the class, we would go through as a class and sit and do these are all about 4 hours long. You sit and do a 4 hour take the test, and we actually did pretty well on it. It's as a class anyways, but yeah, but you can do it on your own and take the exam. And the CPA exam, one more thing I'll say about people taking it, it's not an intelligence test. There are very smart people who don't pass it. It's a diligence test. It's people are going to sit down and do the questions and do them again 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 and keep doing. You'll do the same questions. If they have a test bank of 4,200 questions, you're going to do each one of those questions several times. The ones that you missed, you're going to do even more. And that's really what it is. It's a diligence test. It's not an intelligence test. There are people that are CPAs that are not terribly intelligent, but they're very diligent people. They will sit down and do the work and do the work and do the work. So, having said that, it really is kind of a lonely trek a little bit because you got to sit there and study and do this stuff, and it's all up to you basically. But it is doable, and people pass that test every day. Okay, now if you're planning on taking the exam after 2024, we should probably look at that because it changes significantly. And make sure I get my screen up here before I do this. All right, so the 2024 exam, they change it quite a bit. all the core sections that we've had for years are gone. So the auditing, regulation, FAR, at least in name, and regulation, those are gone. Say hello to the new sections we have. Let's see here. So here's the new core. FAR is now accounting and data analytics. Audit's the same, yay! But they included accounting information systems in there. And tax is set as its own section. Now you notice there's 3 sections now. That's because you have 3 options for the 4th section. So everyone's going to take the 3 core sections, and the past is, past those same as before. Now there are 3 specialized sections that you can go through. None of these make you experts in those fields. The CPA license is exactly the same. Everyone's going to get exactly the same CPA license no matter which option you pick. But your studying changes based on those options. So let's take a look here. So option 1, you can do business analysis and reporting, BAR. And this would be sort of like more, more like around the accounting area. Information systems and controls, this would be sort of like the auditing, but probably emphasis a little bit more on the computer side of it. And option 3 is taxes. And, in case you're wondering, that's kind of the new thing. It's going to be a core of 3 different, the 3 different core classes now that are, or courses that are there, tests that are there, and then also then you get to pick one of the other ones, and you have to pick one of the other ones. So in some ways it's a little more flexible, that it can give you a little more for your interest, and then, but at the same time, you're going to have people that passing the Cpa exam who have not actually sat for the same thing. So it's going to be a little bit tricky in that way. It's quite a big change. Now, kind of interestingly, back in my day, when you're taking the exam, they used to give you choices and questions. You could do this tax problem, or you could do this statement of cash flows, or whatever it was. They used to give you options, but that was given to you as you took the exam. It's sort of like that now, but now you have to pick ahead of time which one you want to do. So come 2024, that's going to be the new, the new way to do it. Now, up until that time, and I believe going past 2024, if you start the exam, they're going to continue it for the next, I want to say 18 months after 2023, that you can pass it using the old like we're using now, style of sitting for the exam. But after that period of time, it's going to go to the new 3 core sections, and then one of 3 options. Any question on that? And if you're wondering, well, how's this all going to work out? I don't know. And that's sort of the unknown. I will tell you this though, the CPA exam, one thing that they've always done, even when I took it, is they've made allowances for section. If for instance, if everybody missed a certain section, they'll say, okay, there's probably something wrong with this section and whatever. When I sat for the CPA exam, they curved the multiple choice questions on one of the sections by 9 points out of 60. So and that's about 15%. 15% of them were, it was a curve of about 15%. So it isn't like, don't think that, oh gee, no one's gonna pass this exam. They are, there's gonna be a lot of people that pass it. But it's gonna be different. And because it's unknown, I don't know what to tell you about it. No one does until people actually start taking it. So any questions on that? So it's a big change that's coming, but and I guess it really depends on where you're at, where you want to take it. Does anyone have any questions on that? So 2024 is going to be quite different than it is. And in some ways you may think about it as being a good thing because you actually get to pick which section you are more comfortable with. Do you want to do the accounting route, the auditing route, or the tax route? But the actual license you get will be exactly the same. That won't change. Question on that thing? Your stunned silence is very reassuring. All right. Well, I think we'll go ahead and get started a little bit on chapter 3, and then we'll call it a night. So let's go ahead and okay. So chapter 3. Start a little bit in ethics, and just so you know, this is going to be a big thing. All this other stuff. Okay. So ethics is huge. It's part of the auditing section of the CPA exam. It's 15 to 20%, and it's big for a reason. And the reason is that all we add to financial statements is credibility. So this idea of ethics, and what we're going to talk more about now is independence, is a big deal. It's a really big deal to auditing in general, that people can trust, can rely upon us, and that there's some assurance, and that there's credibility to the financial statements when we audit them. Okay, so chapter 3. Covered members. Covered members are people who are held to a higher standard. Okay, so the question becomes, when you're doing an audit, there are certain people that can influence an audit and certain people who are probably unable to influence an audit. Those people that are able to influence an audit are going to be held to a higher standard of independence than anyone else, right? If you can actually influence the audit, if you're working on the audit or something like that, you're going to have to be, held to a higher standard when it comes. So if you're auditing IBM, you're going to have to be held to a higher standard of that than other people who have no impact on the audit, who are still working for the CPA firm, but they don't have any impact. Okay, so who is a covered member? Oops. First one is all of the members who are on the audit. So if you're working on the audit, you are a covered member. If you are a partner in the office that's doing the audit, you are also a covered member. So if you're working on the audit, or if you are a partner in the office that works on the audit, even though you're not, it's not your client, it's not your, you're not working directly on it, because you're a partner who is a principal who has authority in the place, the idea is that you can influence the audit. So all the partners in the office and anyone on the audit itself are going to be covered members. They're going to be covered by these independent rules, and they'll be held to a higher standard. In the consulting area, people doing consulting, the partners and managers only. It doesn't apply to seniors or associates. And these are the groups that they mostly focus on when they talk on the CPA exam. They'll focus on the partners, people who are on the audit itself, and people who are in consulting. Now, so these are the first three that we just talked about. This partner and manager, these are the non-attest people. They are sometimes called 10-hour people. They're called 10-hour people because they're really slow. It takes them 10 hours to do anything. No, 10 hours is that the consulting has to be, there has to be some significant consulting to be held to this higher standard. And so, if you do an hour or two of work, they call up and ask a question about something, you give them an answer, that's not going to put you into this higher category. But if you do 10 hours of billable work, if you're billing out for 10 hours, then you are considered a covered member. If you're not, if you only work for, if you only build 7 hours, you're not a covered member. And you don't have to follow the more strict rules that the covered members do. So they're a lot of times called 10-hour people. The 10-hour people are people who are not on the audit, but they do consulting basically with the client. It could be tax consulting, it could be information systems or whatever it is. So the 10-hour rule is for people who bill out for 10 hours or more. Okay, some more people who are also called covered members. Anyone who's in a position to influence the audit. For instance, a senior partner in a different office. The CPA firm itself is a covered member, must be held to a higher standard. So if you're in the CPA firm itself, if it has a pension plan and you're auditing IBM, can't have a direct interest in IBM. They're a covered member. The CPA firm itself is a covered member. Okay, and any entity that is controlled by covered members. So if there's more than 50% of it is controlled by covered members, it's also considered a covered member. All right, and we'll go over, we'll go over the first part here. Direct financial interests. Oops. So covered members cannot own any direct interest in the client. If you own one share of stock, you're out. When, if you're auditing IBM, you have one share of IBM stock, you're out. Indirect financial interest. Oops. Some examples of this. Standard Poor's 500 mutual fund. So if you have a Standard Poor's 500, if you a Standard Poor's 500 fund, you buy into the fund then takes your money and invests in IBM or whatever. Now IBM is probably in the, I'm sure they're in the Standard Poor's 500. So it's indirect, right? You invest in the fund, Standard Poor's 500 fund. They take that money and invest in the top 500 companies. Now notice, this is probably immaterial because there's 499 other companies in that fund. It would be very unusual if one company could make much of a difference overall to that fund. So even though you have this investment in a fund, and the fund has the direct interest in the IBM, say, it's probably immaterial unless there's something strange in the fund. There's something it's immaterial because there's 499 other companies in it. Okay. Another way you could have is invest in say Bank One. That is not how you spell loans. So for instance, you invest in a bank. And that bank loans money to IBM. It's indirect. You're investing in the bank. The bank is then making the investment in IBM. And it's probably also immaterial because Bank One probably makes loans to a bunch of places. It's probably not just IBM. So again, that indirect, it's okay as long as it's not material. Oh no, cancel. I don't want to leave the meeting, cancel. I tried to click on share screen and I almost entered the meeting. Okay, you guys been yes. All right. Okay, so we'll go through these first ones here and then we'll call it a night. Okay, Gina is a member of the audit engagement team for IBM. She owns 5 shares of IBM stock. This ownership is immaterial to Gina. Okay, is Gina a covered member?
Yes.
Yep. Interest, is it direct or indirect?
Direct.
Direct. Material or immaterial?
Material.
It's immaterial, but it really doesn't matter. Is Gina in violation?
Yes.
Yep, she is in violation. You cannot have any direct interest. One share of stock, you're out.
Who determines if it's material or not?
Well, in this case, it doesn't matter, but it should be, it's whether it's material to the actual person making the investment. And it's a vague area, you know, as far as what's material and what someone considers material or not material. Yeah. Now, I mean, for direct investments, it's easy because whether it's material or immaterial doesn't make any difference. You know, immaterial is just as much of a no-no as a material investment. But yeah, and it can be a little bit more tricky when you get into the funds. Standard & Poor's 500 or Standard & Poor's 100, you're not going to have any problems with that. But if you start getting into a fund like a tech fund that may have more money in IBM, I think you actually have an example we'll go over next week that has that in it. But yeah, it really is. It is a judgment call. There's no doubt about it. Not so much a judgment call here. For instance, Greg is a member of IBM Engagement. He has a S&P 500 mutual fund, and the mutual fund has a direct interest. Okay, so again, IBM, one of 500 companies. So there's 499 other companies in here, and some of those companies are going to be bigger than IBM. So, okay, Greg, is he a covered member?
Yes.
Yep. Direct interest or indirect?
Indirect.
Indirect. And material or immaterial?
Immaterial.
Immaterial. Yep. Is Greg in violation of the independence rules?
No.
Nope. No, it's indirect, immaterial. You know, and if you think about it, if there's 499 other companies in here, probably not. You know, whatever IBM does probably won't change that too much. Helen is not a member of the audit engagement for IBM. However, she is a senior auditor in the engagement office. Excuse me, I said that wrong. Office. She owns 500 shares of IBM stock. This investment is material to Helen. Okay, is she a covered member?
Yes.
Actually, she's not. She's not a member of the audit engagement team, right? Let's go up here. Sorry. So she's not one of these, but she's a senior, so she's one of these, or you know. So if she's not on the audit engagement team, but she's a senior, she is actually not a. She disappeared. So she's not a covered member if she's a senior and she's not on the audit engagement team. Okay, so she's not a covered member. The interest, is it direct or indirect?
Correct.
Direct. And it's material, right? It comes down and says material. Is she in violation of the independence rules?
No.
No.
No. She can't be. She is not a covered member. So she is not in violation of independence rules because she's not a covered member. Okay, let's stop here. And by the way, this chapter is a little bit more, I don't say technical, but you know, it's a lot of this, but not that kind of it's almost like taxes or something. Dependent child, but not, you know, 17 and not, you know, whatever. So anyway, okay, so what's going to happen now? I'm going to send out the exam right after class. you'll get examine your email account. Let me make sure I have it in the assignments and due dates. I am going to take this out. I'm not doing that. Hey. Okay, so the exam, Chapter 1 and 2 exam is going to be due next Friday. And the Chapter 1 and 2 handout is due tomorrow. I think most of you guys get that in already. And this classical sampling, hopefully, you guys don't see this. Let me check and make sure you don't see it. Because it's not due. Hey, all right. So I'm going to send out this Chapter 1 and 2 exam, and it's due a week from tomorrow. No, hold on a second. There we go. All right. So I will let you guys go. Have a good see you in a week's time, and look in your email in probably like the next 10-15 minutes. You should get the Chapter 1 and 2 exam, and it's due a week from tomorrow. Any questions?
I ask a question that's not related to audit.
Sure.
What do the clocks mean behind you?
The clocks were an experiment. I'm in my basement because the office upstairs, my wife uses it. She has therapy and stuff. So she, being in the basement, I don't need confidentiality or anything like that. So occasionally you'll see someone walk past me and get milk or something. But the clocks in the background were, I was going to have different time zones and stuff just to be goofy. But what I didn't realize is how loud those clocks are. So those clocks are not running right now because they are so loud that it's deafening. I should have got quiet clocks, but I didn't. So they don't mean anything right now. I have colleagues that have kids that are all over the world, different universities and stuff, that they actually do have separate clocks so that they know like when to call their daughter or whatever. They don't mean anything in my case. Any other questions? All right. So I will see you guys in a week, and I'll send out that exam, and it's pretty short. It's the CPA, the questions that come off are identical to basically what we went over. And there's 3 more questions on it, essay questions, and it's due in a week from tomorrow. Okay, questions? All right, well, have a good evening, have a good weekend, and I will see you next week.